Most people go into retirement thinking about the wrong thing. I'm going to reveal the real factors in 5 charts that determine what causes retirees to enjoy retirement and not just survive it. Over 25 years ago, I started helping people retire, and I too was initially focused on the wrong thing. I might have had the book knowledge to help people retire, but my experience over the years walking to and through retirement with so many people, I've seen what the successful probably 1% do to set themselves apart to live much happier and wealthier in retirement. So here's chart number 1, the Eisenhower Matrix. The Eisenhower Matrix is inspired by Dwight Eisenhower, who said, "What is important is seldom urgent, and what is urgent is seldom important." And this framework I'm giving you is from Sahil Bloom. I'll post a link in the description to these charts and more resources. The mistake people make that weakens energy and finances is spending time on stuff that doesn't matter. Focus your energy on what's important. Here's why. And it starts here in the upper right for your responsibilities and the opportunities that are important and urgent. But where we really want to live is over here on the upper left, where you're working on the important stuff, but with more time. And if you're like retirees that I work with, those that are happy or doing important, productive things, but at a more measured pace than when working, you're building so you don't get overwhelmed by stress. And then here in the lower right are the unimportant but urgent. Often you have no choice but to get these done, so delegate what you can. This may mean buying time for the things that you don't like doing. Maybe that's yard maintenance or changing the oil in your car if you have the surplus money to do so. And then certainly over here in the lower left, the unimportant, non-urgent, aim to delete the waste. Productivity matters. A study published in the Journal of the American Geriatric Society found that retirees aged 65 to 79 who volunteered experienced a 43% reduction in symptoms of depression. Successful retirees see how cutting waste and engaging in productive lifestyles at the proper pace improves their wellness, finances, and satisfaction. Chart 2, who will be sitting in the front row at your funeral? Because if you look closely, there's an opportunity cost for who you spend time with. The green zone are your highly supportive and frequent relationships. Maybe these are your spouse, children, best friend. Pour into these. The opportunity zone are those supportive relationships, but less frequent. Perhaps you have children or grandchildren who live further away. Maybe it's a good friend who, for no good reason, you just don't see quite as much as you'd like. What's getting in the way are these in the danger zone, those frequent but ambivalent relationships. Aim to either reduce the frequency of these or perhaps even improve the relationships to move them into the green zone. And then those that are in the red zone, these are the frequent and demeaning relationships. Preferably they're removed or at least managed to their true place. These are draining and they're costing you more time in your opportunity zone. Research indicates that older adults with strong social connections experience a 43% reduction in disability and about half the rate of cognitive decline compared to those with lower social activity. Well, bad relationships cost time, money, and fulfillment, but good supportive ones add to these buckets. Chart number 3, Sahil Bloom uses the Ikigai framework. It's a Japanese concept to measure a person's purpose or reason for living. So use this mental framework to find the overlap of what you love, what you're good at, and what the world needs. The trap people fall into in retirement is they get settled and they don't try new things. They don't work on improving what they're already good at. So we have a client who certainly doesn't fall into that trap. She spends time quilting and she's really good at it. And her and her friends, they send these beautiful and practical quilts with missionaries to Central America for those in need. For 30 days, 30 minutes each day, you can get good at something. You can learn a skill. Becoming good or at least proficient gives momentum to get even better. The hardest part is starting. I bet you could think of one thing right now you want to start doing either for the first time or pick back up again. For that thing that you love, you're good at, and what the world needs, commit to it for at least 30 days. I mentioned at the beginning that most retirees are focused on the wrong metric. And you'll notice I haven't talked much about finances yet. I'm getting there because that is important. If you're new to this channel, money's at the epicenter of what we talk about, and our overarching goal is to help you maximize your return on life. But most of society focuses on getting to a net worth number to escape the world of work. But that's where we see failure, because if you can pay your bills but not enjoy your life and not live fulfilled, the money has a limited purpose. So what happens is people have enough to retire, but there's no plan to retire to something. The money's there, but now what? Chart number 4 helps you answer that question, will you be dancing at your 80th birthday party? Fidelity's revealed through its retiree healthcare cost estimate that the average retiree currently spends on average at age 65 $157,500 on healthcare and retirement. That's $315,000 for a couple. Having physical wealth ties directly into your financial wealth. The New York Times reported on a research study linking exercise to saving money in retirement. It says, becoming more physically active today might help us avoid thousands of dollars in healthcare costs later, according to a new study of exercise and Medicare claims. It finds that people who start to exercise before or during middle age typically save anywhere from $824 to $1,874 annually on healthcare costs after retirement, and the earlier they start their workouts, the greater those savings can be. So here is the bronze, silver, or gold challenge. Find the right physical challenge for you and stick to it. There's not one right way to make this work. The primary components are moving your body for at least 30 minutes per day, eating a healthy, nutrient-dense diet, and get the right amount of sleep for your body. If you don't do these things, the quality of life goes down, and so does your bank account. Chart 5. My happiest clients are not the ones who obsess over their finances. I mean, most of them hired us because A, they've been really smart with their money, and B, they don't want to obsess over the details anymore. Together, we have a solid plan. The details are certainly not ignored. They're confident in it, and we meet up regularly to discuss it to ensure we're on the same page. They don't find the need to obsess or be anxious. But life drifts towards complexity. I have clients who owned a rental property producing income, but they really didn't want to be landlords anymore, and I see this often. The rental property was good to them for years. Even having a property manager wasn't getting that hassle factor low enough. We looked at different tax strategies because they had a lot of appreciation and would pay taxes on the sale, but ultimately they decided to sell it outright and pay the tax. To them, it was worth it. Prolonged financial anxiety is shown to intensify cognitive decline and have an effect on relationships and physical health. Well, this is the return on hassle spectrum from Nick Majuli. Higher return investments historically come often with the most difficulty or hassle, yet oversimplification may not earn the return needed to sustain income throughout retirement. Targeting the middle of this curve typically optimizes the difficulty and the hassle with the return potential. Now, when it comes to having a solid investment plan, a bucket approach looks at when you need money. This guides how much to have in conservative assets like cash and bonds, and how much in growth assets like stocks for the long term to outpace inflation. Having a broad market approach with low-cost funds can serve the core of this need. Putting the right investment plan together is what we call asset allocation. A simple investment strategy will work fine for most people in retirement. Now, we do add some layers to build on that for our clients, including a tactical strategy, which has a more active component to get more defensive when the data indicates that, and a focused approach in certain factors of the market that have historically done well. But we have those dialed in and we execute it so our clients are not having to hassle with that. I mean, why would they want to? They can focus on what they want to in retirement. Remember, life drifts towards complexity, and sometimes you need to pull it back towards simplicity. That's what our clients, Brian and Lisa, had to do after selling their business. I posted a video running through their financial plan and what life is like with $6 million. See what you can learn from their situation in this video. Before I let you go, the article with these charts and a link to Sahil Bloom's book, The 5 Types of Wealth, are posted in the description down below. And if you'd like to explore what it looks like to work with me and my team, our goal is to help you maximize your return on life. Just click on the link in the description below. Thanks for watching.